Hello, darlings. And now it's time for your favorite part of the show, our Stacking Benjamin's headlines.
All right, we're going to take it right from the press release. This comes to us from Business Wire, which is, by the way, a Berkshire Hathaway company.
President Business.
Isn't everything a Berkshire Hathaway company now?
I'm okay if everything's owned by Warren Buffett. He's a good dude. He's good people.
Makes the world a better place. Well, does this make the world a better place? This news is out of Zurich today. UBS, the big brokerage house, and Wealthfront, in quote, and this is directly peeps from the press release, industry-leading automated wealth management provider, serving the next generation of investors, signed an agreement whereby UBS would acquire Wealthfront in an all-cash transaction valued at $1.4 billion. Through the acquisition, UBS will accelerate its growth ambitions in the U.S., broaden the firm's reach among affluent investors, and expand its distribution and capabilities. Oh, gee, what's going on here? The big brokerage player, UBS, coming after the millennial, coming after Gen Z, coming after the Wealthfront peeps.
Yeah. Turns out all that technology really doesn't buy independence, does it?
I thought this was going to be game changing. I thought the whole idea of robo advisors was they were going to stick it to the man.
Yes.
They were going to take it to the man.
Till the man shows up with bigger pockets.
Isn't it interesting? I think Spencer Jacob had it right on Monday. For people that miss Spencer, he talked about the GameStop revolution and how Wall Street, OG, actually likes that. Wall Street's like, hey, guess what? We created a whole new generation of people that think they can beat us.
Well, and I think that, the story here is that not that Wealthfront was acquired by UBS. I mean, it'll be interesting to see what happens. This happened to United Capital, right? United Capital sold to Goldman Sachs a couple of years ago. The trend is
United Capital being the big, for people that don't know United Capital, it was the big financial planning firm.
Yeah, it was a pretty good size planning firm. Yeah, a couple, 10, 15 billion or something. The story is now is it shows that big companies don't have to do anything. We were talking on Monday about banking and product fees. We had a question from somebody about, like, how do we get the help people who can't afford to pay banking fees and all this other sort of nonsense. Like, how do we help them? There's no incentive for innovation at the investment level because somebody else is going to do it, and then UBS can just come and buy them. So that there was another article that I read just the other day about how people just despise Vanguard technology. Like, the technology platform for Vanguard is trash and hasn't improved.
We see it. We see it on our platform all the time. People that love Vanguard, everything else about Vanguard, can't stand using the website. They talk about how
or sitting on hold for 3 hours to talk to somebody. That's an easy transaction you should be able to do online.
They have problems listening to people. They've only got one ear. Talking about Van Gogh, right?
Okay.
No?
How long have you been sitting on that one?
Been waiting on that joke for like a month. I got to use it.
Just waiting for one of you to complain about the customer service. And I'm like, yes, there's my opening.
That didn't come out when I used my real voice the way it did in my head. I thought it was going to.
Thought it was going to be way funnier.
Oh, it was.
Mm-hmm.
Just
continue, OG.
Grumpy pants. Okay, that's enough crickets. We get it.
But this wasn't the issue. This wasn't the only issue with Wealthfront. I mean, Wealthfront, for people that are new to the show and haven't seen this incredible story, the whole story arc, let's go back to the beginning. Wealthfront, Betterment, the whole robo-advisor trend. The first thing that you and I reported on was that the term robo-advisor is a horrible moniker. Because there's no advising going on. There is digital automated diversification, which is not what an advisor does. An advisor might outsource that to somebody like Wealthfront, but there's no advising. Then the second thing that we reported on was how these companies that were going to change everything and we're going to all lower the fee schedule for the average person had to find ways to make more money. So Wealthfront had to create some funds, some internal funds that looked a lot heavy on cash and a little bit higher fees than the ones that they had so that they could actually start bringing in some money, because this idea of sticking it to the man wasn't really working.
And put all of your money into it without telling you.
Yes. Immediately you go into our fund so that we can make more money. And then now, well, guess what? We need an investor exit, and UBS is I don't think it was ever about you.
Well, I mean,
but you being the investor,
being
the investor in Wealthfront, it's not
ever?
about you. It's about it needs to be. I do think Vanguard, let's go back to Vanguard. I do think Vanguard's about the investor. I do think Vanguard's about, I don't think there's no motivation to make it better. They're rolling in assets. They got a bunch of people that are out there saying, go with Vanguard. I mean, go into any online forum. Everybody says, go there. So the average investor goes to this website that is suboptimal and goes, well, I guess I got to endure it, because there's no motivation, OG, for them to change it.
Yeah.
With Vanguard.
That's right. So why?
But I do think that, when you look at their low fee approach, I think Vanguard is about the investor, though. But I think they look at what they need to change.
On the Wealthfront front, on the front of Wealthfront, the Wealthfront
on the back on the Wealthfront porch,
back into the front of Wealthfront, back to, I don't know,
back on the front.
We'll just call it the front. Maybe that's what they'll change their name to. The front. Yes.
Is this whole thing an F-front? Is this whole headline in a front?
Oh, nice. That was a good one, actually.
Verbal ninja.
Yeah. Well, like a green belt. Let's not quite crown you the.
Can somebody say something
belt
of substance, possibly.
Wax on, wax off.
Yes. Paint the fence. Back on the Wealthfront. I'm hoping that this will open up a path for the brokers at UBS to be encouraged to work with people who are under the 250K or 500K limit that they put on their commission platform. Because all the big brokerage companies, Merrill and Morgan and UBS, it was so ingenious. They didn't say we're not going to accept clients that have under X dollars. And I think the number is 250,000. It could be different. But last I knew it was 200. They didn't say we're not going to take you as a client. They said we're not going to pay the brokers for accounts under 250. You can have all the
you can take as many as you want.
You're just not going to make any money doing it. So obviously that skews the people that are interested in helping for advice. That skews the demographics there. So maybe by this acquisition, that will have a path for people to get advice. We talk about how a Robo advisor isn't an advisor, but there are people at UBS that are, right? There are brokers and financial planners and good people at those companies. So maybe this will kind of transition, or at least give a path for those people that don't have $1 million yet to get good advice, for their financial planning goals. Not just a great asset allocation that's tax loss harvest, whatever the hell the computer says to do it, Maybe.
But if Wealthfront really isn't about advice now, how is it going to be about advice now that they're with UBS? Like,
no,
how is that gonna, you're
I'm
hoping they start attaching this to something. They take the technology and they attach it to something.
Well, that's what they're going to do.
More.
Absolutely.
Yes.
Yeah, that's 100% what they're going to fold it into UBS. And this will just be a product offering for UBS to attract clients that have under whatever their limit is for their regular.
Much more like
brokerage.
the Goldman Sachs Marcus approach.
Well, maybe, but I mean, United Capital didn't have, it wasn't the same demographics. Certainly Goldman Sachs, although maybe you're right, because Goldman Sachs, you don't think of as a mass affluent middle America financial planning company, right? Like you've got 25 million, you go to Goldman Sachs, right?
Yeah.
And so maybe in some respects that was the same thing, them kind of niching down a tier. I don't know, like going, well,
Yeah.
we'll slum it with all those people with $1 million,
Right.
and maybe it'll be a similar thing here. I mean, that's the best that you can hope for.
Because Marcus really is, much more mass market.
Well, Marcus is, I mean, that's a whole different thing.
Yeah, but it's a part of Goldman Sachs. I'm saying this might work in a similar way.
Yeah. Well, United Capital, Marcus, Goldman Sachs, three different things.
Yeah.
But
no, agreed. Yeah.
But maybe that's the thing. And I think everybody has to recognize that every company is in business to make money for shareholders. And especially as you get more and more into using VC money and private equity and stuff like that, those folks want a return on their money. You know what I mean? Like when you see, hey, this company was, acquired a 27% part of such and such of organization, that PE money isn't sitting there. That VC money isn't sitting there going, well, we hope that you change the world and let us know if there's a profit down the line. They're like, turn this over because I need some cash.
Yes.
Back.
What's our exit strategy? In every meeting they're talking about, what is my exit strategy? How do I get this money back
to
redeploy something else
so I can go somewhere else? That's right. So that's what this is for a lot of people. But there's some good stuff. I mean, out of the couple of them, I think probably if I had to pick a winner, I would say Wealthfront's my favorite. But it's far from an advice platform, right? So maybe that's the combo. Maybe that's what'll happen because.
Is that what? So if I'm an investor though, listening to this, I mean, we've kind of sliced and diced this, but what's the real takeaway? I mean, is it that commission-based advice, big guys always win, stay away from the big guys? I mean, do we I don't know what our takeaway is. Like I see this headline and I go, okay, Wealthfront. And I mean, if I'm not in Wealthfront now, what does this do for me?
I don't think that it does anything for you. I mean, if you're a Wealthfront client, carry on. You might have, hopefully, some access to other stuff on the back end of this transaction. If you're a UBS client, I don't think this does anything for you either, except for maybe you'll have access to, cooler, smoother technology because that's what they're buying, right? They're not necessarily buying some cool asset allocation model. I mean, UBS already has that. They don't need that.
Yeah, they already have their own.
So maybe the synergy will be worth something.
Interesting to see what happens here, if this changes the Wall Street game at all, if it reincorporates what we saw in the 90s, the dismantling in the early 2000s, the dismantling of small accounts on Wall Street, maybe a step toward bringing that back. And I don't know if that's a good thing or a bad thing, but it'll be interesting to watch. I mean, technology might be able to bring the little guy back to Wall Street platforms.
It's the only way that it can.
Yeah, because it makes it much more cost effective.